Hi, everyone. This is Jason Breck of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. I've had him on a number of times. It's Craig Hemke. You may not know him as Craig Hemke, but a.k.a. Turd Ferguson. Thank you for coming back.
Hey, Jason. Merry Christmas. Always nice to visit with you.
Yes, Merry Christmas and Happy Holidays and Happy New Year to you too, Craig. Now, I want to talk about the Swiss Gold Referendum. You covered this a lot on your website. Why do you think it failed?
Well, that's a multifaceted question, I suppose. First and foremost, it failed because the central bankers wanted it to fail. They are the ones that pull the levers. They're the ones that are connected with the big money. And I think there was a significant misinformation campaign surrounding it, especially in the last couple of weeks, as it was polling quite well in Switzerland, all the way up until about the 1st of November. And then the polls really started to shift away. I think also there's just a general lack of education, even in a place like Switzerland. There's just the economic education is lacking to the point where people just really don't understand the significance of why you would want to limit your central bankers and thus your politicians, or maybe it's the other way around, your politicians and thus your central bankers, by forcing them to adhere to some type of hard money standard like that. Anyway, I was hopeful, because Switzerland is about the last remaining real democracy, direct democracy in the world. And I thought, if any place has a chance to have a referendum like this to enforce that discipline upon their politicians and their bankers, it'd be Switzerland. And unfortunately, even with the decades, even centuries of independence and sound money, they still voted no. And I was really kind of sorry for the Swiss that they did it. I'm not Swiss. I've never even been there, although I'd like to go. But I was just very disappointed for them that they missed the opportunity.
Yeah, I mean, I was optimistic initially, but then when I saw that the funding had been pulled, right, that the games had been played with PayPal, I was like, they're going to pull out all the stops, whether it means, rigging the voting machines or I believe they, from listening to Egon von Greyerz and Claudia Grau talk about this, they weren't supposed to, the politicians and the Swiss central bankers weren't supposed to actively lobby against one side or the other, and yet they blatantly
Yeah, they did.
Yeah.
Yeah, they did. No,
so
go ahead. I'm sorry.
Well, I mean, this I guess this ties into the the great Keynesian experiment you talk about, right? Because in the past, the Swiss, they weren't brainwashed by Keynesian economics, but now it seems the hardworking Swiss that have gone up through academia or business schools and things like that, they've been drastically brainwashed by it, and they're anti-gold now because they believe in Keynesian economics.
Yep, and they are all in. Back on September the 6th, 2011 was the surprise announcement that they were pegging the Swiss franc to the euro, of all things. And, that was the time, that was when gold was smashed as well. That was the peak of gold. And if you go back and look, actually, gold was smashed for about $50 or $60 5 minutes before that announcement was made. I would contend, frankly, and I've written about this several times, that the remaining Swiss gold that they actually still owned and still held was taken from that day forward from them and leased into the market and used to cap and drive and suppress price back down. I don't think Switzerland has any gold left, at least not any gold with clear title. I mean, they can claim that they've got 1,000 metric tons, and they may have paper obligations for 1,000 metric tons. But good luck actually getting it back. And I think that actual here's your gold and storing it back. And I think that's probably part of the venomous campaign against the Swiss Gold Initiative, is the central bankers knew that if they actually had to retrieve actual physical gold for Switzerland, it was going to be a near impossible task given the insatiable demand that's coming out of China and India. They're having a hard enough time meeting that. The vaults of London are empty. We see the London gold forward rates being consistently negative, in fact, actually historically negative at times. That's clearly a sign of physical delivery stress through London, which is, for now at least, still the main delivery hub. If the referendum had passed, it would have really put things in a bind for the central bankers. And so, again, the fact that it shouldn't come as a surprise, but that doesn't necessarily mean that the gold trade, the idea that you want to hold gold, is somehow obsolete. The changes are still coming nonetheless, and we just have to be patient.
Yeah, I agree. The central bankers are only delaying the inevitable, with these tricks and with the paper markets and things like that for gold and silver. I mean, now eventually at some point, Craig, they're going to create enormous physical shortages. They're either going to bankrupt the miners, or they're not. The West is not going to have any gold in order to play, these fractional bullion games with. It's going to end soon. So I can't tell you exactly when, but it's going to end sometime soon.
Exactly, and that's where the question always then comes. How much is gold actually worth in terms of U.S. dollar conversion? And it's an impossible question to answer because you don't really know how much gold is actually there. I mean, the current price is based on this multi-leveraged, collateralized, rehypothecated system where 1 ounce is pledged over and over and over through the system, 10 times, 20 times, 50 times, which basically means there are 10, 20, 50 beneficial owners or people that think they own the same ounce of gold. And so when they all come calling for that ounce and realize it's not there, or at least not, physically there for them to take delivery of, well, then the whole system, God only knows where it's going to be repriced at, because we just simply don't know how much gold is actually left in the West. It certainly appears, though, that all the deliveries are being made kind of hand to mouth on not necessarily on available stock, but on flow. You can see that again in the changing GOPO rates and the periodic backwardation in spot versus futures. It's going to be a very, very interesting 2015, no doubt about that. I mean, I hate to sound like a broken record. I really thought things were going to kind of start going in our direction in 2014, and instead the game continued. But clearly the signs of stress are in there in the system. You can see it if you look closely. There was tremendous stress placed on the physical delivery system, if you will, back when price fell toward 1130 and 1140 back in early November, and we had a huge rally from there. And now we're kind of drifting back toward that direction, and the backwardation is showing up again. So it'll be very interesting to see as we round the corner into 2015 how price responds and see if it just doesn't get away from the bullion banks a little bit.
Yeah, I mean, the paper price has not really gone up. It looked like there were some times where it may have broken out in 2014 where it was close to breaking some overhead resistance, and then, it just got slammed back down. But
that actually just happened 2 weeks ago. Price rallied hard on December the 9th, and for 2 days pressed up against the 100-day moving average. And if it had gotten through there, because it was already through the 50-day, had it closed above there, that 100-day, we would have started kind of living off of its own virtuous cycle of positive momentum. Well, of course, we know what happens. It happens all the time. The price is capped there through almost unlimited printing of naked short gold by the cartel bullion banks that, for some reason, get away with it still. Momentum is stalled. If price begins to drift back down, the shorts are re-emboldened, and then it gets jammed back down. And now here we are, $60 lower.
Well, they get away with it because the CFTC won't do anything, and the banks are basically doing, what the Treasury Department and the Exchange Stabilization Fund and all those guys want to do, which is, make the gold look weak and the U.S. dollar look strong. But we are seeing some evidence, though, Craig, that things are starting to sway, not with the paper price, but, Barclays, I guess, and I think UBS was the other large investment bank. They're both fined for gold market manipulation, the London Gold Fix and other things. And also, we're starting to see that EU countries, whether that's the Dutch Central Bank, Germany, I believe, according to Kuz Jansen, the mainstream media tried to say that Germany has stopped asking for the gold back, but they are getting their gold back still. And then, we're seeing Austria and some other European countries now start to either demand their gold back or talk about auditing. And I believe France, the new presidential candidate who may take over next year, in 2015 in France, who may win that election, who's the favorite, I think she has talked about repatriating their gold, just like, Charles de Gaulle when the London gold pool ended, I think, in the 1960s.
And that is a significant movement and should tell, anybody listening to this that thinks, old Turd's got his tinfoil hat on too tight. Look, this is a real deal. The price of gold has been manipulated and suppressed for, well, really ever since the establishment of the Bretton Woods Agreement after World War II. But it really started to ramp up in the 50s and then through the 60s with the London Gold Pool. And the U.S. lost almost half of its gold trying to maintain that peg at $35 an ounce, all through active manipulation and suppression using physical metal. Where they finally, I guess, wised up, if you want to call it that, is when they decided, hey, wait a second, what are we using physical metal for when we can create paper metal instead? And they opened futures trading, gold futures trading on the COMEX on January 1st, 1975, and they've been levering up the system using paper metal to suppress price ever since. Like you said, though, Jason, the key to this system still remains physical delivery, because the paper price is just an imaginary price if there are not physical deliveries made at that price. I mean, you and I could say, hey, gold is $100,000 an ounce, but unless I'm willing to sell it to you or you're willing to pay for it at $100,000 an ounce, then we're just living in la-la land. So there has to be physical deliveries made at the paper price. So far as they've driven it down and all of this gold has flown to the east from the west, they've been able to make those deliveries. But it is those stresses that we're seeing in the system, most specifically just in the last 2 months, especially as price got down below 1150. Those stresses are now readily apparent if you choose to look. This idea of repatriation is all part of it. Countries looking around and going, this all looks a little fishy to me, and we don't really know the future of the euro, and I'm not sure where all of this is going. I think we'd better get in line now, as the Dutch did, and get our gold back now before everybody else does. And what'll be interesting to see is if other countries don't attempt to kind of jump the queue, like you said, France, maybe what was the other one that came up lately? Austria. We'll just see if that trend, I can't imagine it doesn't continue in 2015, and it only puts more and more stress on the system of that leveraged, rehypothecated system. So it really should be a very exciting 2015.
Yeah, and I think Australia even asked for an audit too, which is, I guess it's starting to all chime in. And if you go back through financial history, this is starting to look similar to exactly what happened with the London Gold Pool. So all the gold didn't leave at once with the London Gold Pool, but the U.S. had, I think, like over 20,000 tons of gold at one point. And then, a span of within like 8 years or something like that, a lot of the U.S.'s trading partners just started asking for their gold back because we were in the 1960s and Lyndon B. Johnson was doing, the welfare warfare programs, massively guns and butter and all these other things, and people stopped mistrusting them. So I think we're at that stage here, with the petrodollar, with other countries. There's just evidence that Russia's buying an enormous amount of physical gold. It's not like what the investment banks are saying, Russia's going to dump gold. I don't think they've sold any gold.
No, absolutely. That was when price was capped and suppressed and driven back down early last week. That was just a story that was floated for cover by the banks. And the media picks it up because they think the banks are somehow, these objective analysts. Oh, yeah, well, the gold's down $30 because of these rumors that was all nonsense. And again, that's a big wild card for next year. The U.S. has been slowly backing the Russians into a corner ever since February of this year. And they're certainly not making it any easier for them. And I would contest that or suggest that the reason crude oil has gone from 108 down to 55, that is a kind of a covert sanction regime by the U.S. If they figured out if they can drive the stock market up and things like gold down through paper trading by their banks, why the hell can't they do that to crude oil too and sanction the Russians by cutting the price of crude in half?
Exactly, Turd, and the Russian ruble too. So the
Exactly.
Russian ruble started to collapse before the oil price did. They knocked them both down. That's like double pain there. Who cares about these little sanctions that they give to an oligarch or something like that? If you can blow the currency apart, this is like hardcore. People don't realize this has been attempted. These financial warfare with destroying the war opponent's currency. The British tried to do it with the American colonialists. I believe they brought a ship into Boston and they filled with like American colonial script or the Continental, and they try to cause hyperinflation. The Nazis were working on a project with they kept a few Jewish printers and engravers alive in concentration camps to try to perfectly counterfeit the British pound and the U.S. dollar. They actually successfully counterfeited perfectly the British pound, and they were spending massive amounts of it in Switzerland during World War II. And God forbid if they had been able to, to perfectly counterfeit the U.S. dollar, what would have happened before the war. So there's historical precedence that, that governments and countries do this in times of war.
And I don't understand how Putin and the Russian leadership don't look at that as an act of war, a covert act of war. Wait a second. You're putting all your troops right on our border through Ukraine and Latvia, and all the other Baltic states, and now you're collapsing our economy? So, yes, that's a real wild card because they're not going to take it lying down, especially in partnership with the Chinese. So anything could happen in 2015, no doubt about it. And I have mentioned this to my subscribers countless times in the last couple of months. We can look at the paper price, that current paper price of metal, and be sad and kind of bummed out about it, and gosh, it's down and all that. I can tell you, I don't care about the paper price. What I try to emphatically implant onto all my subscribers' brains is that their metal has never been more valuable than it is right now. It doesn't matter to me that the fiat conversion price is $1,200. All I know is the metal that I have has never been more valuable, given everything that's going on in the world and how I expect it all to play out.
Yeah, I don't view it as an investment, Turd. I think that's a mistake some people did. They were chasing the paper price higher 2010, 2011, and buying metal higher, but it's insurance. So look at all the things around you, just like you said. Look at the geopolitical events. Look at what's going on in Russia. It definitely is a good insurance policy at this stage, given how there could be really bad supply problems coming up soon if we start seeing massive amounts of bankruptcies in the miners and things like that.
That's it, and that's an extra point, a very good point as well. The example I like to use, just so that people can kind of see where we're coming from. If a farmer is going to plant a field full of corn, and the going rate for a bushel of corn is $1 a bushel, but he knows that by the time the seed and the equipment costs and the fertilizer costs and everything, it's going to cost him at least $2 to grow that corn. He's not going to plant any corn. It's just not. You're not going to do something uneconomic or non-economically smart. And the same thing is true for so many of these miners. They just start shutting down, or they just start producing at a minimal amount to keep the mine open, at a loss if they have to, in the hope that price will come back. Again, we're talking about basic supply and demand here, not what the speculators can do to paper price in the short term. We're talking in the long term, supply and demand, laws of economics. And I just have a sneaky feeling those are going to start reinforcing themselves right here in the near future in 2015.
Now, for the next system, Turd, I know you speak with Jim Willey. Do you think the Keynesians are going to be able to get the SDR, or are we going to go back to some type of gold standard in the near future that from maybe trade settlement from the East?
Or it could be a combination of both, actually, Jason. It's really, we're talking about so many different independent variables, and we're looking into the future. It could be any combination of any of that stuff. Perhaps the West continues to operate on this outdated system of IMF and World Bank and ECB and Fed and all that kind of stuff, while the East creates their own system, which maybe not necessarily is a gold-backed currency, but maybe just some gold-backed trade settlement system. They just divorced themselves. Why are we even using dollars in the first place? Or why do we want to tie ourselves to the debt obligation of the U.S.? We're doing just fine without them. So it's hard to say exactly what will be the actual order of the new financial paradigm, but there will be those that will cling to the current system because they cling to their power and they derive power from the current system. But I would not be surprised at all, even if it's as soon as next year, if the forces, the countries in the East, Russia, China, India, all the way through Southeast Asia, if they don't kind of combine their economic forces and create their own system to compete with the West.
Yeah, it's tough to know what the next system is and who's going to win. So I don't think it's smart to, guaranteed bet on either system. So that's why I think, holding physical metal, gold and silver, maybe also a little bit of platinum and palladium outside of the system, no counterparty risk. I think that's the way to go. But I think long term, you talked about the gold standard there. The gold standard is not perfect either. I mean, the gold standard is also manipulating the price of gold and capping it, but at least then it's protecting our purchasing power, and it's going to keep prices, from spiraling out of control with what we're paying for now with food and healthcare and things like that.
There would almost have to be some type of debt revaluation and everything else that would go with it, because the accumulation of this debt that now is just continues to grow at such an exponential rate, that debt can't be serviced under some type of gold standard, that it forces government adherence to some type of sound money policy, because the debt continues to grow, which is why they continue to print more and more money to try to service that growing debt, that mountain of debt. So to reinstitute some type of gold standard, there's almost going to have to be a full system reset. Hard to imagine something like that happening peacefully, and so it's. I would imagine there'll be, again, this kind of blended system, or that the creditor nations of the world will offer their own alternative that will be, voted to be superior by the markets of the world over time, while we just deal with this mountain of debt that just continues to grow and grow.
Yeah, Alan Greenspan also said, I don't know if you paid attention to what he said at the New Orleans Gold Conference or read his past, essay when he was more of an Ayn Randian and free market and Austrian school type of economist. But he said that basically sound money is impossible in a welfare state.
Yeah, and that's right. And I mean, that's all part of why Nixon closed the gold window in the first place, was between the wars and the Great Society and everything else, the demand for we needed more and more money. And then the more dollars they printed, we were going to get drained of all of our gold, and it was unstoppable at that point, and that's why they had to close the gold window. But you're absolutely right. Yeah, in this type of, what do you want to call it, the welfare state or the great Ponzi or the financial political complex, whatever it is, under this current system, it would be impossible to reimpose. And that's why it's so vociferously argued against, if that's the right word, every time you see, some analyst in the media, because they know it can't happen, and God, that's the last thing they want to have happen. So Hard to see it ever happening without significant economic and political upheaval. And I'm not even sure we want to go down that road in the first place. It'll be very interesting to see how it plays out. But I just can't imagine that the creditor nations, China, Russia, India, Brazil, that they don't offer some type of alternative outside of the Western system at some point in the near future.
Yeah, I agree. It's just tough to see. My crystal ball's kind of broken here, so I'm not quite sure exactly what the next system is going to be. I mean, I look for the IMF white papers and some of these. Obviously, like the goal, the game plan going forward for these Federal Reserve economists and stuff is financial repression, stagflation, trying to play a dangerous game with controlling the inflation and things like that. But, I don't know how long they're going to be able to keep this going before everything blows up in their face. And the people in power, they don't want, radical change. I think they just want to maintain basically the status quo, give or take a few small minor adjustments here or there, and keep on chugging. But I don't think that's sustainable anymore.
And that's the point that we're reaching. And again, the squeeze is now so great on everybody else. I'm not this big class warfare type, and I don't like to rail against the 1%. I think a lot of that's contrived politics, but there is some truth to it. In that the only folks that have really benefited from maintaining the system since 2008 are those that had assets to begin with. I mean, if you had a $400,000 401k in 2008 and it went down to 190, and now it's back up to 600, you think QE is great. I mean, that's wonderful if you were lucky enough to have the assets to begin with. But if you're just the regular guy, more than half of the U.S. population who since 2009 has seen their median income fall by 15%, while the cost of living has gone up and the cost of tuition and medicine and food and everything has gone up. I mean, you're getting squeezed really badly. And when this happens, that the rest of the world, these creditor nations, begin to move away from this dollar-based system, that inflation genie is really going to come out of the bottle. and make the pinch on the middle class, if you want to call it that. I hate using middle class. It sounds like we're talking about India. The
or Marx, or we're quoting Marx directly.
Yeah, exactly. And the middle income folks, the regular folks.
Let's get those bourgeoisie.
Yeah, I think that's what's going to get really uncomfortable here in the U.S. specifically, or really anywhere in the West over time, because again, the only folks that are really benefiting from the ongoing maintenance of the current system are those with power and with assets. And they're going to do everything they can to maintain their power and protect their power. But boy, as the masses begin to really feel the pinch, it's going to get quite interesting politically. But that's probably not, that's not next week. That's just something that is eventually going to come over the horizon.
Yeah, the inflation is eventually going to be unignorable, and as we were saying earlier before I started recording, I mean, if the oil price keeps going lower, a lot of these shale oil jobs, which were really the only full-time jobs or the largest amount of full-time jobs created in the United States since 2009, and there were millions of them, and there's a whole bunch of jobs, related to the directly and indirectly to the shale oil jobs, those jobs are going to go away. So they're not going to be able to hide this thing that much longer. People are going to begin to question, well, where are the full-time jobs now that the shale oil jobs are gone?
Yeah.
So
this idea of economic strength is all kind of that's all part of an illusion anyway. I mean, sure, you know what? If you live somewhere on the island of Manhattan, you probably think everything's great. Oh, wow, yeah, look, my bonus this year is fantastic. But, boy, you travel the rest of the United States. You just talk with your neighbors. You find out it's not great. They might be building a new house in your subdivision now, finally again. But the idea that the U.S. is just, oh boy, we're just chugging right along, is only supported by make believe and manipulated data that comes out of the U.S. government, who again has the the inspiration to falsify data in the first place. Again, that's this idea of management of perceptions. And the wealth effect. If we can convince everybody that things are going great, then they'll really start to believe that everything's going great. Well, it's not going great. And again, that's just something that eventually is going to cause great strife here in the U.S.
Yeah, and besides New York City, Turd, D.C. is also doing great in terms of if you drove around the area, D.C. Metro, we have 3 of the 5 richest counties on an average median family income basis. There are construction cranes everywhere around here. They are building, luxury condos. Very expensive and fancy restaurants are moving in here. All the top chefs from all over the country are moving in here, and they're building larger homes, $1 million homes further and further out away from D.C., so people can commute and things like that. So I think this is a bubble too. I think New York City and D.C. are the Twin Towers, to use a Lord of the Rings analogy, since that movie's one of the last Lord of the Rings movies is now in theaters. I think those are the 2 power centers of the country, the Twin Towers that basically run this country, through central planning and market manipulation and things like that.
And I think folks need to realize, I mean, we have, at the expense of other nations, brought a lot of this, out here. All the inflation that we have brought forth through all this money printing, we don't see it necessarily here in the U.S. because it's all exported around the globe. And this deal with,
or in assets,
yeah, and this deal with Russia is really, really dangerous and unpredictable. And I would, just as the American politicians don't want to lose their power, the powers in Russia don't want to lose theirs either. And we are really backing them into a corner. And how they might respond in early 2015 is completely up in the air and could really upset the American apple cart pretty quick. And I don't think most people realize. I certainly don't think American leadership understands that either. So we'll see. Like I said, as we turn the corner into next year, yeah, paper price of metal is down, but I really does not bother me in the least. It's a sale, if you will. I just keep adding a little more all the time. In terms of value, though, my metal's never been more valuable. And I'm going to now take some and convert it back into dollars? Serious? That's what I want to do? No, I just want to keep moving dollars into metal. That's what I'm going to keep doing. And I think that's your only winning strategy in preparation for what is most assuredly coming.
Yeah, I'm steadily accumulating more silver too. I just want to thank you again for your time, Turd, and I want to wish you and your family a Merry Christmas and a Happy New Year. And please tell our listeners where they can find your work on your website.
Well, for Turd Ferguson, it is TF Metals Report, tfmetalsreport.com. I got to tell you, it certainly isn't all about me. The community there of like-minded folks that understand the stuff that we've been talking about and can see what's coming and they want to help each other prepare. The community is what makes the place special. So please stop by, check it out. If you want to get a little more specific with things, I have a subscription service buried within it that's a whopping $10 a month. So, it's not like a real bank breaker. But the site on balance is free, and like I said, I think it's very special. I think it's unlike any place else on the internet, and I would encourage everybody to check it out at, again, tfmetalsreport.com.
Great, and you have a podcast service too, right, over on your website?
Yep, that's all part of the $10 a month. You get a daily podcast and review. You get webinars once a week and posts that discuss all the global markets every day. So I think it's a pretty good value. And again, you get to be a part of this wonderful site. And I encourage everybody to check it out.
Okay, great. Well, thank you for your time, and hopefully we'll have you back on when gold and silver prices are going higher, and maybe the situation with the miners are resolved, because I think the miners kind of want this to end already.
Yeah. Well, hopefully, yeah. Let's try to do this again in the first quarter, and we'll just see how things are shaping up.
Okay, great.